Hi everyone, you're all very welcome to another weekly recap or weekly preview for the markets this week. So this week is going to be a lot heavier in terms of data, in terms of speakers. We've got a range of different important elements this week. We've got the WEF World Economic Forum meeting in Davos, reconvening after a sabbatical during COVID. We have interest rates, we've got a Kiwi interest rates, we've got a raft of data through Europe, the US, and of course the UK. I suppose the big talking point today this morning was the European IFOs came in ahead of schedule, which is obviously positive. Now we have seen the indices broadly speaking tick lower, but that was after a very strong close at the latter part of last week. Now I suppose throughout the week, as I said, we've got speakers with the World Economic Forum. We're going to get important, influential people speaking at that, which could potentially move the markets from a short-term arbitrage perspective. So just be mindful of that. I've got my tweet decks up here constantly ready to go as well. Just be mindful of that. So I suppose today we do have Governor Bailey speaking at just after 5 o'clock. We've retail sales in Kiwi. Tomorrow is going to be an important day because we've got PMIs across the board. So we have them in Europe, we have them in the German zone, we have them in the Eurozone broadly speaking, and we do have them in the US as well. So tomorrow, a lot of important data out in PMIs. Broadly speaking, anything above 50 is said to be expansionary, but of course we want it to be as high as possible. So 55, 56, 57 would be kind of your baseline scenario for a lot of these pieces of data. Now, if we do see PMI slip back to kind of 51, 52, that is going to bring, I suppose, the recession or growth slowdown narrative back into the front as well, back into the frame in terms of discussion points. So just be mindful of that. For those who don't know, as I said, anything below 50 is said to be contractionary, which would be recession. So just be mindful of that. It's not going to maybe play out tomorrow, but it would be important over the next kind of 6 to 9 months as outlook kind of shifts to the downside. Tomorrow we do have Powell speaking at 5:30 or 20 past 5. We do have Lagarde speaking as well at 7 p.m. So again, we're keeping an eye on some of these comments as well, because this could potentially move the markets. You know, Chair Powell has moved the markets quite significantly over recent days and weeks. As I said, Wednesday, we do have the Kiwi interest rate at 3 a.m. UK time. They are looking for an increase in rates. So they will be the first of the kind of the mainstream central banks to get to 2%. And they are looking for a forecast of 0.5% of an increase, which will bring the rates to 2% on the nose. So just keep an eye on that. That should lead to a little bit of volatility. Euro, Kiwi, pound, Kiwi. We have seen some significant moves in those pairs lately. Now, just be mindful as well, the Kiwi has moved quite a bit in recent weeks. I suspect that's the market's actually pre-pricing in this rate hike. So it's an expectation that the market's raises by 0.5. So if we get a dovish hike or we get a 0.25, you actually could see the Kiwi sell off. So just be mindful of that. On Wednesday morning, we do also have German GDPs, Q on Q, year on year. 4%, 3.7. So we're looking for this to be as high as possible, because that will help the indices propel to the upside on the stock markets, broadly speaking, for the open on Wednesday. Of course, anything below kind of 3.7 or 4%, like this is 3.3, 3.4, maybe this is 3.7, you might see the indices getting hit because the growth forecast again is coming in under expectation. Wednesday, we've Panetta, we've Lagarde, we've Lane all speaking on Wednesday morning. Again, this is going to be volatility for the Euro and the Eurozone indices. So just be mindful of that. Wednesday, we do also have durable goods orders in the US, which will be an interesting one as well. So it's not just it's one specific piece of data this week. We've got data across the board in multiple jurisdictions, and it's PMIs, it's GDPs, it's durable goods orders, it's a range of different pieces of data. So just be conscious of that. FOMC minutes out on Wednesday, just after the Brainard is speaking. Brainard, who is deputy to Powell, is speaking at 5:15 on Wednesday. So there is a couple of bank holidays as well in Europe on Wednesday. So that will probably factor in. It's Wednesday night, so that will probably feed into Thursday. So France, Germany, and the Swiss all on bank holidays. World Economic Forum, again, will continue to the latter part of the week. So again, it's a week-long event. Thursday's important day because we've got GDPs. We've got PCEs, personal consumption expenditures, so we're looking for these to be as high as possible. And we do also have retail sales and pending home sales in the US and Canada as well. And then obviously to round out the week, we have got more CPEs. We've got Michigan consumer sentiment. We've got personal income spending from household budgets as well. So that's going to be a telltale sign, because if this gets revised lower, the household spending and personal spending, that will affect the likes of retail sales. And that will affect, I suppose, how much capital or how much excess income has there left, or is there remaining in the household budgets to spend on the likes of holidays, to spend on cars, to spend on all these kind of semi-luxury items within the economy. So just keep an eye on that, because that if that drops, that could be a telltale sign of, as I said, retail sales dropping, which of course will then feed into kind of having a knock-on effect into some of these wider sectors over the next couple of months. So that's, just keep an eye on that as well. So that's pretty much it from the news side. When we look at the charts very, very quickly, again, this was the indices last week. So the three indices, all very similar, had that kind of consolidation grind higher. We sold off on the 20th, and then we rallied back through kind of on the 22nd, 23rd into the close. Now, pre-market so far this week, we have seen the markets pull back. So again, we had a very, very sharp impulse across the board on all of these three, followed by a very, very sharp impulse back into the upside. So realistically now, you can actually kind of see that I have a couple of alerts set here. I'm looking for price action to continue grinding lower through the early parts of this week to try and clean up some of this price action. We had a very, very sharp V-shaped move. And generally speaking, you will try and get the price action cleaned up to clean up this imbalance. So imbalance is when the price action moves in one straight line. So whether it's a sell-off or whether it's a buy rally. So this is a buy side imbalance. This is a sell side imbalance. So just kind of be mindful of that. You kind of want to see the markets being as clean as possible. So that's why I'm looking to see, can these price action levels down here, 38.50 into 38.70 be cleaned out or cleaned up. NASDAQ around about 11,700, 750. And of course, on the Dow Jones at the minute, around about that 31,000 would be a nice area. So I'll be looking, structurally speaking, again, if you look at some of these short-term ranges from last week, rejections, we popped out, we're now pulling back. So we've popped out on the sell side, we've popped out on the upside, and we're pulling back. On the NASDAQ, we haven't actually made new kind of short-term highs. Like we haven't popped out of this area here like we have on the Dow Jones. Would be a less favorable opportunity. But of course, on the S&Ps, we've popped out on the downside, we've popped out on the upside, we're pulling back. So keep an eye on some of these regions down here to see how does the price action react. So it's going to be a very choppy week. We've got a lot of data, so short-term arbitrage is going to be a lot of movement. So just kind of be mindful of that. And of course, moving across to the dollar, we're still seeing that dollar sell-off. So this is the interesting area we kind of mentioned last week, between 102 and 102.50. Price action is really coming back from that 105 handle up here. Massive bull run, consolidation. We broke through this short-term area here, just about 103, 103.25. We actually retested this region here, this last previous low. We popped back in, and we've actually started to sell off again. So that should, even though the indices are selling off, if the indices sell off today is brief, this could be help to springboard the indices back into kind of a more modest upside rally, maybe into 12 or 12,500 S&Ps back into this region up here around 4,000, 4,050. I've got actually a level here on the S&Ps around about 4,070. So I'll be worth keeping an eye on that. So just be mindful of the risk on, risk off scenarios from the fundamental side as well. And of course, last but not least is the 10-year. So the 10-year is, as I said on last week, is making that kind of corrective move to the downside. We've higher highs, higher lows on the upside. We're now starting to see a little bit of a shift, a little bit of a pullback in the yields. We were at 3.2%. We're now trading back at 2.8. So that's a fairly significant sell-off in a very, very short period of time. But the yields at the minute are so incredibly volatile. So just please do be mindful of that. I've got a settled region here between kind of 265 and 270. So this is kind of where I would have expected the 10-year to kind of pull back into, to kind of retest some of these levels. At the moment, now, of course, we are in lower high, lower high, lower high. So we are kind of making successive lower highs as well. So just be mindful of that. And of course, with the 10-year selling off, last but not least, with the 10-year selling off, we are seeing that gold recovery continue to take hold. So we rallied off this daily level we looked at for last week or so, last couple of weeks, in fact. We got that nice bounce. So I'd actually taken long positions last week in this region. We've continued to progress higher. Now, structurally speaking, gold has taken out these successive lower lows, lower highs. We've taken out this short-term impulse, and we've cleaned out also this price action up here between 1850 and 1860, and we're still ticking higher. So at this present time, we are seeing gold now continue to kind of churn to the upside. So this, I'm watching this region up here between 1875 and 1880. We do have, structurally speaking, on the we have a 4-hour candle here at 1875. I would now expect this to be met or to be tested. And we also have a 1 hour up here, slightly up forward at 1885 or 1886. We can kind of see it there. We've got a 1 hour. And we do also have this region of interest up here at 1900. Now, if I was to be kind of as pragmatic as possible, I would be looking for price action to come back into this. At the very least, this region up here, but I'd be probably more favoring this region up here. But again, that's provisions on how the 10-year yield performs. So if that continues to kind of moderate to the downside, it's very much going to help gold prices as well. And of course, with the gold prices, you do also have XAU against the USD. So with the USD weakening off, that's also going to help the gold prices. So you've got two fairly strong bullish confluences there as to why gold is doing so well at the moment. One is the weaker dollar. Two is the kind of the tailback in the yield story as well. All right, so that's pretty much it for the preview this week. So it's going to be a volatile week, so just be mindful of that, and do also kind of be pragmatic in your risk management strategy this week, and wait for those setups to be confirmed. So that's pretty much it. We will do a recap on Friday, but until then, have a great week.